Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. So a video, a seminar, webinar, where in half an hour I will tell you what's going on the markets, why some instruments move up, others go down. Some of them move sideways, and we'll try to find decent trading occasions on the market. I hope you're following us. It's not your first daily analytical report. If it is first, I hope it won't be last, because you will see yourself that most of the setups, most of the trading occasions that I'm showing on this seminar, on this webinar, they work. And markets, instruments actually move in this way. You have to know that I'm a trader myself. I'm not only analyst, so it's a different approach. It's easy to be an analyst and tell that the price will go up or down. It's much more difficult to trade it yourself. But here with Alpari, you're in good hands. And professionals take care of you. So I hope you're gonna enjoy our meeting. Let's go to the chart. But first, obviously, let me start with the macro calendar. Thursday, we do not have tier 1 data. As you can see, here we don't have GDP from US, but I don't think it will be so influential on the markets. We'll see. It will be in less than half an hour, so we'll be able to check it ourselves if this data will be influential or not. Apart from that, as you can see, we had a pack of data in the morning, mostly from Europe, where most of the numbers were better than expected. And now we're just waiting for the data from United States. Tomorrow the calendar is rather empty. Well, it's huge, but as you can see, no tier 1 data. That's what I meant when I said empty. This week, I think that technical traders do like this week because we do have movements. Technical traders and trend followers like this week because we have nice movements, mostly with trends. We got some nice trades this week. I think 3 trades. Just one of them is left. Rest was closed on a nice profit, and this one which is left is already protected with a stop profit order, not stop loss. So we won't lose on it. We can make some nice money on this position. This week was all about central bankers. We had Mario Draghi, we had Mr. Kuroda, Polos, Carney. So Mario Draghi was hawkish. Actually, all of those central bankers, apart maybe from Mr. Kuroda, were hawkish. So it was kind of a coordinated message that whole world is about to end those times with an easy money, easy cheap money. That we are about to see some tightening across the globe. Yesterday, after this hawkish Draghi, we got an information from Bloomberg and from Reuters that their sources said that the market misjudged Draghi's speech and it's not so hawkish as everybody thinks. After that, we got a small drop. Actually, I will show you that. After that, we got a small drop here, but the market went up again. So we had a hawkish Draghi, we had a hawkish Mark Carney, We got also a hawkish Mr. Polos from Bank of Canada, which actually helped us because we had a short position on American dollar to Canadian dollar. I can tell you now it's closed on nice profit. So Mr. Polos helped us. He said that the recent rate cuts have done their job, and that the bank is considering options now that the excess capacity is being used up steadily. So they are thinking about rising interest rates in some time. Mark Carney from Bank of England said that some removal of monetary stimulus is likely to become necessary if the trade-off facing the MPC continues to lessen and the policy decision accordingly become more conventional. Right, so we got a coordinated message from central bankers that we're about to see tightening in the monetary policies across the globe. That is causing, for example, euro to go up, British pound to go up, American dollar is a bit weaker, Australian dollar is stronger. Let me show you actually. Let me start with S&P, for example, because that's interesting, because most of the times when you're gonna read about loosening the monetary policy and tightening, so decreasing interest rates and rising interest rates, you should read that lowering interest rates is positive for stocks and rising interest rates is negative for stocks. But you can see that reaction on that coordinated message from central banks was rather bullish. Well, rather it was bullish on stocks. As you can see on S&P 500, we set new. We defended horizontal support here, midterm horizontal support here. Actually, it was expected by us on one of the analysis that we wrote to some trading portal. They used that support, they went higher. Now we're very close to making new all-time highs in times of monetary policy tightening, which is not very common, but I think markets act a little bit weird. Not now, but well, now, but it's nothing new. Next, let me show you DAX. DAX also bounced from a horizontal, from an important support here, as you can see. Okay, let me. They opened on very high levels with a bullish gap. They closed that gap, which is happening very often. It's rather normal that those gaps are closed. But not a thing which is not unusual, was that after closing this gap, the price didn't go up. But went significantly lower, and maybe we'll test this support again. The situation is still bullish. It's not a surprise that the situation is still bullish as long as we stay above this horizontal support here. The situation is definitely bullish. Once this support will be broken, it's a horizontal support, but also in the same time we do have this dynamic support. Price getting there, that will be a sell signal, right? But chances for that are limited at the moment. But if the price will get there, that will be a very negative sign and sell signal, at least in the midterm. As we are on this account, let me tell you about oil. Well, 6 bullish days in a row, and that's interesting, especially after such a heavy drop. I was thinking that the upswing will stop here on this resistance. It actually did. for a short time. As you can see, we got this drop, but then we went significantly higher. So now we have to think, oh, look at that. I also wrote that in an analysis to the same impulses here. This one was exactly the same as this one. That's very interesting. So now many traders are thinking, should we get to the same impulses here as well? Let me just use the different color. I'm sorry. Here. Okay, like that. Also Fibonacci's. Fibonacci's. Yes, I have to. Okay, different colors. We are looking for a potentially good place to stop this correction. Also, I think we can draw a trend line here. Let it be red. Okay, and a horizontal support, I would say that here we do have a nice one. Not support but a resistance. They can go a bit higher. There's a nice local one here. That's interesting. That's very interesting that we do have this horizontal supports and resistances, which come from the history here and here and here, and at the same time they respect Fibonacci levels. So we do have three major resistances. First one is here, second one is here, third one is here. On those three, I think it would be nice to wait for a bearish sign. Shooting star, bearish engulfing, outside bar, evening star, something like that. Wait and enter with the trend, and trend is negative here in the long term. And okay, let's move to Forex market now. Okay, as you can see, bullish Mark Carney. It's a combination of bullish Bank of England, hawkish Bank of England, I'm sorry, but at the same time bullish, and hawkish Bank of England and bullish situation from the technical point of view, where we do have an uptrend, higher highs and higher lows, defense of this horizontal support, breakout of this horizontal resistance and defense. Finally, we do have a breakout of this upper line of the wedge formation, which triggers the buy signal, and from that we should the price heading higher and higher and higher, right? Especially that after the breakout, the next candle is making higher highs and higher lows, and according to price action, when the next candle after the breakout is making higher highs and higher lows, after the bullish breakout, that makes this breakout legitimate and increases the chances for a success. Even if the next few candles will be a reversal, still the midterm situation stays positive here. Euro to British pound, that is interesting because yesterday we got a false breakout. Here the price set new highs, but they failed to hold that levels. Also they broke this dynamic resistance, but also they failed to hold this. Now the price is on a horizontal support here, try to break it once, just now try to break that twice, but without a success. So I would say that so far so good. So far we do have a still bullish signal. but if the price will get somewhere here, that will be an invitation to go short because of this false breakout and because of the breakout of the important support. Because the support is important, because you can see that it works. Right, so euro to British pound for me is more like a pending order occasion, and in this case that's a sell stop. American dollar to Canadian yen, I love this situation here because I traded that. So, and I even before I traded, I wrote an articles and tweets, and I told about that on daily analytical reports that we have such a situation. So you were warned. You were warned about that. Downswing, wedge, wedge, or a pennant, doesn't really matter, or a flag. Breakout, flag, breakout of a lower line of the flag, dynamic support here, and a long-term channel up support, lower line of the channel up support, which in the longer term is a lower line of the flag. Right, so this breakout was very strong, and it caused 200 pips downswing, and now we do have a potentially nice place to take profits. Why? Because we do have 23.6 Fibonacci level, but also bottoms from here, bottoms from here, from September, October 2016, and January, February of 2017. So potentially that's a good place to take profits. For example, here a bounce to this resistance here, and then further downswing, but it looks right to take profits. That is why, for example, I closed my position. I closed my position with a nice profit. I didn't wait for a breakout because it's still a decent money, and the chances for a reversal are getting higher, right? Okay, American dollar to Mexican peso lost the technical analysis for me because the support is no longer respected. This trend line is not either. So I had a trade here as well, also profitable, but now this pair is not trading technically, at least for me, so I just leave it. American dollar to Polish zloty. Yesterday I was telling about potential hammer here, but as you can see at the end of the day, this hammer was crushed. But still, now we are defending this horizontal support. Is this horizontal support relevant? I would say yes, because it was a support in March and April. It was a support in June, and potentially it will be a support now. But we need to see a reaction. But breaking this level will be a sell signal again, because we do have a sell signal for a long time here, but it will be a sell signal again. Euro to New Zealand dollar. I don't like this pair anymore. Not that I traded that, because I didn't, but I like when the pair goes technically, and Euro to New Zealand dollar stopped going technically, so it's out of my interest. But my interest is Euro to Japanese yen. Also, we are talking about that for a long time, and we are not advising to go long, but we are telling that the bullish camp is doing better, and they have bigger chances for success, right? Uptrend, flag, uptrend. Flag is a trend continuation pattern, so when you have a breakout of the upper line of the flag, the price should go up. Also, at the same time, we defended this horizontal support here, this horizontal support here as well. I think that the situation on British pound to Euro to Japanese yen is very similar. Look at that. Upswing, wedge, upswing. Defense of the horizontal support, and one on the way in a shorter term. Euro to Japanese yen, also H4, 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 upswing, wedge, defensive horizontal support here, horizontal support in the middle, upswing. See, and those instruments are not even correlated. We have 4 different currencies in 2 different currency pairs, and look at the situation. That's really interesting, right? You have to admit that technical analysis is beautiful. American dollar to Japanese yen is about to test local resistance, which is a good place to take profits. Not much to add here. I just wait for the price action to tell you what are the chances for the next movement. American dollar to Australian dollar to American dollar, sellers failed to create a head and shoulder formation. Instead of that, we broke the line connecting top of the head and top of the right shoulder, which activates the buy signal. Sooner or later, the price should make those 30 pips higher and touch the local resistance. That's the scenario, most probable scenario for this instrument. Euro to American dollar, that was very interesting because that drop from yesterday, we saw that live, right? And I was analyzing the markets, and we are waiting for analyzing the markets, and we saw a drop on euro dollar. So I checked on Twitter what's going on. I told you about that. That was explained that some sources, Bloomberg sources and Reuters sources, they said that the market was misguided by the Draghi comments. That caused the drop. Interestingly, that drop made a very technical movement. So broken resistance here, 112.80, 112.90. After the breakout became a support, we saw a reaction here, and after that 140 pips upswing. Very beautiful in terms of technical analysis, supported by the fundamentals. Gold, even despite the weaker dollar, the gold couldn't hold high levels. Now they are having troubles. On a weekly chart, I was showing you 2 hammers. Now this week we don't have hammer, and we're getting closer to the end of the week. We're definitely closer than yesterday, right? But yesterday it looked alright. Now it does not look alright. So buyers have to do much better to support the potentially bullish view here. But guys on silver are doing a bit better. This reversal is not so strong as on gold. Still, on a weekly chart we do have 2 hammers on a strong support created by uptrend line. DAX, WTI, S&P 500, I was showing you that. Now rest of the currency pairs, American dollar to Japanese yen, no. Australian dollar to Japanese yen, so we know that in general Japanese yen is weaker. But here is also a nice situation from the technical point of view. Upswing, wedge, breakout of the upper line of the wedge triggers the buy signal, so the price goes up, breaks the horizontal resistance, and we all know that according to price action, broken resistance becomes a support. That's what happened. Broken resistance became a support and the price went higher. So now we are aiming the closest resistance, which is here, which is 60 pips away, which in my opinion shouldn't be a problem for this pair. New Zealand dollar to Japanese yen, weekly chart, so a very long-term situation, but we're about to trigger a signal here. Well, first one is the breakout of this line, but I would wait for a breakout of the neckline of this horizontal resistance here, which looks rock solid. If this rock solid resistance will be broken, that will be a very negative sign for sellers and an invitation for a buy signal. left shoulder head and right shoulder, right? Maybe it will not happen now or next month, but eventually this year it should happen, and that can be a very, very strong long-term signal here. And British pound to Japanese yen, we still do have a position here. That was a beautiful trade. I don't like this pair because it's very volatile. It can kick you and beat you, but at the same time, if you're respecting, if you have money management rules and risk control, and you're respecting your money, you always have stop loss, you don't want to lose too much money, you can still trade it, right? And that description was about me. I have a very, very strict risk control and money management rules, but here I just couldn't resist. This technical setup had everything I wanted, so I entered the long position, and I'm not disappointed. That was a very good decision. I entered with a long position somewhere here. So far it's 400 pips. Unfortunately, just with half of the lot, not with one lot, but still it's around 1,400 euros now I'm making on this pair. Why a long position here? I will tell you, because it will be beneficial for your trading. Let me just create this resistance here. Thank you. So we do have an uptrend. The price is making higher highs and higher lows, right? We just bounced from the uptrend line. But in the midterm, we do have flag. We had a flag. Flag was a trend continuation pattern of the midterm trend. So this one, right? So we ended downtrend here with the breakout. We bounced from the long-term uptrend line. We broke the midterm resistance. And also in the same time after that, we created an inverse head and shoulder formation. And after that, we broke the neckline here of this formation this week. Because, for example, we broke from the channel down formation last week. And here you received a combination of all those bullish aspects. Long-term uptrend line, short-term channel down, inverse head and shoulder formation, breakout from candles, beautiful, beautiful, and then upswing, correction, upswing, correction, upswing. Here we are supported, obviously, with Mark Carney, Bank of England, but sometimes it's like that. You have a nice trade, you're getting destroyed by fundamentals, but sometimes you have a good trade, and you get a help from fundamentals. So it's not a rule. Sometimes it happens like that, sometimes the other way. And so guys, that's our view on the market. I hope you got some trades for you. I think I did, but I don't want to open a position at the end of the week, because my positions are usually open for a few days. So I don't want to open now and close it on Friday. So we will see if I will open anything, especially that I already have a position, so it's not that I'm empty-handed. Thanks very much, guys. And now a short break, and after that we'll have a webinar about technical analysis. If you're new to that, I advise you to come to this webinar, because I will show you those techniques that I was telling you about on trading on a daily analytical report. Thanks very much, guys. For more trading occasions, views, visit our Twitter account and our website, talpari.news.